Okay, welcome back to this tutorial session. And in this session, I want to tackle one issue, and that is how to spot your entry early after the news. So I've shown you how to take your entry before the news. Now I want to show you how to spot your entry early after the news. But for a recap, taking your entry before the news is as simple as updating your chart updating your chart to see the most recent events that have played out. Always summarize your events into R3 or G3, R2 or G2 and breaks. And always know when to trade the next phase of the market. Be prompt on trading the new phase of the market without holding onto the previous phase of the market. Know where there is correction and trade the correction. Know where there is a trend change and trade the trend change. Know where there is trend continuation and trade the trend continuation. If you do that always, you will be fine and safe. Now, without looking for just random entries where there are string break occurrences, you should continue in the same trajectory of trading before the news, applying that also after the news. So what you want to find are the new events that play out after the news. And you know the new events have to be paying attention more to the impulse than the string formation, because the string formation is used only at other times. But when you are dealing with the news, you want to apply only the impulse formations. So when you see an impulse that forms and breaks, that is an event. So you call that a new event. That is why you should always pay attention to what is new in the market. Then you will find your entries and you trade comfortably and confidently without worrying about the impact of the news again. Now, let me show you what the news did and how it affected other traders who did not know what to watch for. So, what it did here was, first of all, the entries that we are taking before the news, this was a news candle. The market went to retest that level. I do not want to adjust the chart to the previous events since that has already happened, but this was a news candle. It went up to retest the first or the last high that was set there. And since this candle did not break that high, what happened? If there was an order block set there, it activated those orders and brought them down. That was the news effect. Okay, brought them down. And when it came down, what happened? There was no new event because this was a string. Ordinarily, if you are applying your string break rule, you want to immediately take an entry here, but because this is news, you are not advised to look for string break entries. You are not advised to look for string break entries. Instead, follow the events and take your entries from the most recent event. Okay, so now no new event formed, which means that it's only the other blocks that got activated that pushed the price down. So, and you who you were trading your structures, that's knowing the event that were completed before the news, that you also rode that wave of the news down here. It did not affect you conversely or adversely. So now, this again attempted to start a new journey to the upside. String break entries, of course, would have gone in for their basic profit, but that is not your concern right now because this is news and after news trading. So this move up to the upside, the market goes and rejects. You are just waiting for a new event to play out. And the new event again happened when the market came all the way down here and created an impulse. That impulse break, you recorded the impulse break level, and then you record your impulse break turning point once the break candle closes. So that is what formed this level at 1.2713. Now, after that occurred, what happened? The market now enters into the correction zone. Okay. Now, how do you trade your correction entry? Remember, you want to see, first of all, a break above correction, and you want to measure from the break to the closing of the break into correction, the candle that stays within 10 pips. Okay. the candle that stays within 10 pips spread. So let's look at the impulse break was 1.2713, and 2723 would be the highest price you want to find an entry. Now this market made a move above 10 pips and went all the way to 14 pips. So that invalidated you trading your correction here. It means correction has not started yet. So because the market has made all of these moves, you allow the market to come back into the correction, into the consolidation box, because the market has not consolidated yet. So you expect that correction happens after the market consolidates, not before the market consolidates, okay? So right now, the market came now to consolidate, entered into the consolidation box, and you want to see when that box gets broken again. But while the market came into the consolidation box, it created a new event, and your attention is on all new events that are formed. So right now, this is the R3 event that formed. You mark again the impulse start level for the new R3, and also mark the impulse break level for the new R3. So that gave you your high and your low. Now, a turning point has been created, new turning point, which gives you a better opportunity to find an earlier entry. No longer based on the previous event, which was the previous arrow trade that broke at with a higher momentum. Now you have something short and tight for you to find that entry on the new event. So with the new event that has played out, this is a new turning point. What are you expecting? You want to see that the break above the turning point is not longer than 10 pips. Okay, and this was a break candle. So because it stayed within the 10 pips box, you can trade your correction at this point. And that is where the entry projection started. So for the correction, entry projection is 1.2708 entry price. And remember, once you find an entry price, the market must respect the entry price in the future. So let's see what happens. The market, of course, is supposed to have that entry price once spotted as a level to watch for. So 1.2708 entry price, and you want to see the market go back to recover all the move of the most recent impulse. So 1.27, your first take profit, because it is 15 minutes time frame, you break it down, TP1 20 pips, TP2 20 pips, and TP3 10 pips. So from here, you have 1.2708 to 1.2728 will be your take profit. So 1.2728, the market made the move to 1.2728, right? Very good. So now while you are in the market waiting for your profit, you are also watching for the new event that play out. So let's see how the market played that out. This was a new event that played out while you were already in the market. You had a new bullish impulse or G3, and you mark that level. You have the impulse start level marked here, which corresponds also with the previous impulse start, or rather impulse break level. So the same candle that acted as the impulse break level also became the new impulse start level, and that candle began also the move towards correction. Then you have the correction move, or what you will call the correction candle. This is a correction candle because this was the new impulse break candle. New impulse break candle, and the break for correction trading, then correction candle or correction entry candle. So now the market went and formed a level when this new impulse or G3 event was terminated. So that gives you a new turning point, which is 1.2709, and a new impulse break level for the G3 impulse, and that is 1.2721. So, but meanwhile, you are already trading the correction of the most current impulse, okay? So let's see, the newest event now gives you your entry. Now you already had your take profit for this, expecting first 20 pips here. Now let's look at where the market came down when it did this break. it came down to retest again the entry price and rejected that entry price. You see, it closed exactly at that entry price for the most recent R03 event. Okay, so it respected that entry price when it came to do the break for the new G3 event. Again, when the new candle opened after it closed forming a turning point, okay, what did it do? You see, it tried to break that turning point immediately, all right, to go into the correction for the new G3 event. But what happened? It came, met, encountered the entry price, okay, for the most recent G3 event and did what? Rejected it, which is also the entry price for the correction candle of the most recent R03 event. So all confirming the same thing. That is how the market reacts to it. It rejected it because the entry price forms a level. And that alone gives you different places you could have entered. First entry, second entry, again returning back to that entry price, and third entry returning back to that entry price. Okay, then now you have the same take profit because it's the same entry price if you knew what to do. But while that is done, again, observe that this is a new level. The first entry has to close before you look for your next entry. So this forms a new level. So let's mark the new level why that first entry has been taken. So we'll mark the new level. That's a new impulse start level. Then the time frame, selecting only the time frame of observation. In this case, the time frame of observation is also the time frame of entry. So this formed a new level whilst you were in the market already. A new event played out when a G3, second G3 formed after the news. So this was the first G3 that formed after the news and the second G3 that formed after the news. While you found your entry on the second R03 that formed after the news, trading is correction. So for your correction, you know that since correction is expected to recover the total move of the impulse, your take profit should be around that area. Okay, or you also allow it to make the full circle move of that time frame of entry. So full circle move ordinarily, again, you see the projection line here goes all the way up. Full circle move, if you are calculating, is 40 to 50 pips. So 40 pips minimum for 15 minutes time frame or 50 pips maximum. So if you wanted to do only one entry on that full circle move, that would have been just taking a big or a large bet. So let's take it that you break your entries into 3 entries, okay? Let's do it like that because if the market comes to retest that entry price, it gives you 3 entries. As far as the entry has not made, is full circle profit, all right? So full circle profit is 50 pips. We want to do that calculation so that you can do that for yourself other times. So first entry, using the minimum lot size, of course, of your account that can hold the drawdown expected. So first entry is 1.2708 for 50 pips full circle, okay? Second entry for 40 pips. If the entry price is retested and rejected as a level, then, and if the first entry has not made this full profit, you can now have multiple entries at the same level. Then third entry at the TP1, which is 20 pips. So let's take it first entry 50 pips, okay? If that is the only entry you have, then you know you can break it down. But if the market gives you 2 entries or so before it gives you profit for the first entry, you can have multiple entries at that point. So that is how to trade after the news. Now, this is first entry, 50 pips. That will be 1.27. 50 pips will be 5.8. And you can see the market goes right there, 1.2758. So that will make profit. Second entry, 4.8. 1.2748 will be the take profit. You can see the market also made it to that second entry, take profit. And third entry, 1.27 after retesting okay, 1.27 2728, okay, which comes back here. So that is explained already. Now, all of these events that form the new impulse are part of the entries. Okay, the entries taken here are what gave momentum to all of these events because the market does not move in any direction if it does not first encounter an order block which gives an entry. Okay, and those are the entries because they are all buy entries starting from the first correction entry here, okay, to the retest of the entry price and the second retest of the entry price. So they all give the momentum because there are now three buy entries coming here for those who know how to trade after the news. And it gave all of this impulse to the upside. So first rule for impulse trading. Okay, let's state it that you have to know the rule for impulse trading. Without looking at the time frame ordinarily, the first rule for impulse trading is when a new impulse forms, hold your entry until a new impulse breaks. Okay, when you take an entry, hold your entry until a new impulse breaks. So look at this entry and always exit only on the impulse that forms and breaks in profit. That's the rule for impulse trading. Okay, so now this correction ordinarily was supposed to be terminated here, but there was already a new impulse that has formed while that entry was ongoing. And the first impulse that formed did not move into profit when it broke. It formed a new level, which can give you new watch area for your entry. You want to have fourth entry. This is where you have your fourth entry. So let's look at that. When this new impulse break level formed, remember at impulse break level, you want to see what? Continuation. Okay, you want to see continuation. That's why it's called impulse break or continuation level. So as this break candle had the momentum to break this impulse break level and break the previous impulse break level, it confirms with your entry. Okay, two converse levels at the same point broken by the same candle, it confirms with your entry projection, which is a buy entry projection. So the existing entries have nothing to worry about. So now when this is broken, where is your next place to buy? You want to see a buy above this impulse start, previous impulse start level, which means that the break candle have to close and you start counting your observation, confirmation, and your entry. Remember that the rule states that all of these entry criterion must be met. The entry criterion must be met, that all these three candles must be above, open and close above the new level broken. That's if it is the impulse break level, that level must be broken. So now the break occurring here gives you your new entry candle at 1.2738, and that means you are also watching for a new uh, exit price, which would be 40 to 50 pips. So 1.2738, first circle is 20 pips TP1, and next 20 pips TP2, and then 10 pips TP3. For that, being that is the first entry. And then this entry price will form a new level that the market will respect in the coming hours or thereabout. So you've got about four entries here, giving momentum for a buy pressure in the market. And that is what happened so far. So we'll have a new level that formed afterwards. This impulse stayed active all the way up until a break was spotted. And now we can mark the break level at a new impulse break level. Again, following the setting, we use a crimson color to mark that level to differentiate it as a high. And now we start watching for the next event on when that level is broken again to find a new entry corresponding with that structure of the market. Now, new event occurred again when the first attempt at breaking the level. First, let's mark the turning point. for clarity, the new turning point 1.2751 highlight to reflect only on the time frame of observation so that any analysis done on other time frames will not be affected by what you drew on this other time frame. Now we have a new event that formed there while you are waiting for a fifth entry when this level breaks and meets your entry condition. That's the break candle should stay above, then the observation, confirmation, and entry candle should all be above. So an attempt to break this level was not successful at first. Then you have the next attempt that gave you your break, observation, confirmation, and entry. But remember, the rule says that entry candles must not be higher than 10 pips of the level broken. So that entry, you have to wait until a retest of this level. So no new entry has been taken so far, but we found the new events that started, which should be marked. So let's mark the impulse start level of the new event, which was a G3 event. And the more you do this, the safer your trades become after the news, riding the wave of the new momentum that forms with the news. Since the news makes the market volatile and there are a lot of active players in the market, it is also the best time to trade without missing out on an opportunity to boost your capital and make more profit consistently while doing it safely. So now for the new event that form, we have a new turning point, which should also be marked at the closing price of the break of that most recent impulse, which was a G3 event. So the more you do this, the better you become at your trading, and all that would have become a distraction or noise for you will no longer be a distraction because you now know what to sieve out or filter out and what to pay attention to that matters most. So right now, look at the new level that formed, has become the most recent thing to watch for. And again, you know that the spread area between the entry level, uh, between the impulse break level and the impulse turning point forms your consolidation zone. So you want to see when that level breaks or the market goes into correction. So let's see what happens next. The first attempt was a correction, and that brought us to a new day. So the first attempt was a correction, and it brought us to a new day. That correction did not meet our correction rule, so there was no correction entry to have taken there. But we had a previous turning point that the market went to look out for, and that was where these rejections occurred for the new day. That's this turning point for the buy entries that we are taking and got terminated here. This was their turning point. Okay, so the market came down to retest the turning point, rejected the turning point, and made the move back up. So your entries, of course, from turning point of or the previous turning point to its break, that is also a consolidation zone. Remember that that was its impulse break level and its turning point. So this zone is a consolidation zone, and you know the rule for consolidation zone, you do not bother about trading inside of the consolidation zone. So you want to see the level break, and you also want to see uh, you want to see the market respecting the turning point to do its correction. So right now we have two levels to watch for entry, and that is the previous uh, that's a previous impulse break level and the most recent impulse break level also. Both of them are within a close range of 10 pips. So the market has to break the most recent. And the most recent is at 1.2765. So wherever the break occurs is where your entry begins from. And right now, there is, of course, no valid break. Even though we have a break here, let's look at that. This was the break, and the level stood at 1.2765. So we expect an entry to form anywhere before 1.2775. So where do we have our entry? Our entry candle formed 1.2777, which was above 10 pips. So that does not meet the condition for entry. But what happens after that? The market comes back to retest the level, and that gives us all of this rejection here to show that the level is valid. The market rejected the level, and now you want to apply the same rule. So you want to see a break above the level, an observation candle, a confirmation candle, and an entry candle all above that level. So let's see for the most recent attempt at encountering and breaking that level. You have first attempt rejection, valid rejection, but for any rejection to be valid, the candle must close in the direction of rejection. Okay, so for the first attempt, the direction of rejection is not consistent with your expectations. So the second attempt now gives you that direction of rejection. So the candle closing here gives you that, and your new entry price should be 1.2768 ideally. And that entry, of course, your take profit and your stop loss, first of all, is within a safe zone 1.6758, which comes all the way down back into the impulse zone. So whatever plays out later in the future would have to be continuation of either returning back into this zone for you to expect something new, or moving upward to continue in an upward direction. But right now, up to the most recent event here, the market has been in a consolidation phase. And why is that so? Because we have a new event that has played out here that we have also not taken note of. So let's mark the levels that form here. We have the impulse start level, that's for a G3, a new arrow 3 event, an impulse start level that has formed here. Again, highlighting only the time frame of observation. Then we have also the impulse break level. So let's use a proper color. We use a crimson for the start of a bearish impulse or arrow 3 event, and then we use the blue or green slab for the break, so that it corresponds with the bullish starts, if there is a bullish start there. So this is what we do in order to trade after the news confidently and successfully. So now we have the break at this point. So which brings our attention to the most recent turning point, where we begin to expect correction to happen. So right now we adjust our turning point to the most recent, which is 1.2768. And again, the rule for trading correction will now apply above that level. So you see exactly what the market is doing above that level. The market now, when price returned into the new consolidation, this is the new consolidation zone, is a very tight one, which is a good one to allow you to see where next to take your entry. You see that this was the break of the turning point, and from turning point to the entry candle of correction, what happened? You have a very tight spread. So 1.2768 to 2772, it meets the condition, which is being less than 10 pips. Then when you take a correction entry, you want to exit at the impulse start level. So that becomes your take profit point. You can always exit manually if you mark the price, which is 1.2779 from 1.2772. That is about 7 pips. Okay, that's your valid exit on that. That is why you should always update your chart to see the most recent event and mark them out, because the market will use the most recent event to counter the previous structure. All right, so now we have a most recent event again. Attention must always be paid to the most recent event, which in this case is an arrow 3 event. So we are marking now the impulse start, or rather the impulse break. We use the green or the sky blue color to mark the break so that it corresponds. and then we already have a slab there that stands also for it as its own impulse start level. Then we have a new turning point close to it. So let's move the nearest turning point to that new turning point, because the market will always react to the most recent event. So we have the new turning point when we watch for consolidation and what? Consolidation and correction. So you can see here how the market reacts here. The market is reacting to the new turning point and the new impulse break level, which is called your consolidation zone. So above the turning point, when the turning point breaks, you have a new correction entry level. So let's find where that happened. So correction entry starts from when the first candle breaks it and stays within 10 pips of that level. So this is the first candle after the break. This is the first candle breaking it, and this is your entry price 1.2772 again, and then the take profit will be 1.27 at the impulse start level will be at 1.2779. So entry price 1.277227, so another 6 pips to expect, while your stop loss will be below this level, where the turning point and the impulse break level will both act as your support in this case to protect your entry. So right now there is an entry at 1.2772 following this. Now you can see that trading this structure, there has not been any risk whatsoever, because you are trading the most recent event. So paying attention to the most recent event is going to help you trade after the news and trade successfully, same way you do when trading before the news. So take advantage of the extreme volatility that comes into the market when there is a news and after the news. So that will be all for this tutorial, and if you put this into practice and become consistent with it, respecting your entry rules, you will always be safe. Now remember again that before and after the news, you do not have to look for entries based on impulse, entries based on the string break rule. Rather, you apply the new events and watch